Hi all, my name is Alex Challans. I'm the CEO of the Quantum Insider. Thank you so much for having me today. I'm so sorry I couldn't join in person for the Quantum Analyst panel. I'm stuck here in London, but you're in for a great discussion today. My personal background is actually as an investor in a London-based private equity fund. So I actually entered the quantum market with a keen interest in investment trends. My presentation will focus on the investment side of quantum computing, and we'll cover the investment trends, a little bit around quantum hype, of course, the journey of the SPACs. So let's start by zooming out a bit. This chart is taken from our data platform and shows the annual private investment in US dollars by region since 2012. Quantum computing has been driven forward by private companies for actually over 20 years, now most notably with the founding of D-Wave in 1999. Over this time, we've actually seen relatively muted investment with only a few larger rounds between 2012 and 2019. And these were into the likes of Silicon Quantum Computing, PsiQuantum, and ID Quantique. Now, a lot was going on in the background, but everything got a little bit more interesting with Google's claim of quantum supremacy in 2019. Investment started to increase rapidly in the space, with 2021 seeing over $2 billion of private capital flows. And I remember when we had this announcement that everyone was suddenly reading the Financial Times, spotting it and going, what am I missing? Now, I would say one caveat though, that much of the recent increases in investment have been driven by SPAC processes, which I'll actually cover later. But there are notable exceptions, such as PsiQuantum's $450 million Series D last year. What's been happening more recently? Now, here we've zoomed into the quarterly view of our data. We can see that most funding is actually going into quantum computing companies. These are typically the ambitious startups looking to build quantum computers themselves from the ground up. Now, if you just think about that, we're requiring huge amounts of investment into engineering and research. A lot of these companies require labs, they require the smartest people in the world to build some really cutting edge technology. Less funding seems to have gone into the other companies, for example, hardware component companies, but actually because they're already supplying quantum startups, they may already have bootstrapped revenue, for example. Notable exceptions to this trend include Sandbox AQ, which stands for AI and Quantum. This is a spin out from Google, which is rumored to have raised a very large investment round. And it starts to show some of the bigger rounds coming into software in this space. The last 2 years actually also seen the advent of quantum computing unicorns. Companies such as IonQ are trading at over $1 billion market cap, with some private companies out there rumored to be in the multiple billions of valuation. The increasing interest in quantum from investors has prompted some in the industry to raise the alarm against quantum hype. A few months ago, a short seller, Scorpion Capital, issued a long negative note on IonQ. Whilst it was widely criticised as being rather unfair on the company, it highlights the concerns of a lot of those in the industry. We also saw a piece in the Financial Times from an Oxford physicist calling out the industry hype and particularly flagging the issues with SPACs. The fact that we're even seeing this in the Financial Times is quite interesting. And the kind of key themes we're seeing are really around over-promising technology, really over-egging the timelines where we're going to see useful quantum computers, and scientists worried that founders are taking advantage of naive VCs. These concerns are only supported by looking at the public market performance of the quantum companies that have listed over the last year or so. Now you've got 3 quantum computing companies here, IonQ, Rigetti, and D-Wave. And you can look at the performance. Likewise, Arkit is relevant to quantum computing. It does quantum secure communications. And again, the performance has been pretty horrid. Now, public markets seem to be showing a complete lack of faith in quantum companies. Should we be concerned? Well, maybe not quite. As you'll see in this protocol article, de-SPAC performance, that's when the actual company lists, has been pretty appalling across the board. So let's take a little bit more of a critical view on the quantum computing market. There is an increasing backlash against the backlash, actually. Many people continue to be excited about the prospects of quantum computing. And I like 2 points particularly made by this VC investor in a LinkedIn post. You see, SPACs have left clearly a bad taste in the mouth, but most professional VC investors understand the risk they're taking on. VC was specifically made to take high risks on high impact technologies. Now, the skeptics would have you believe that there's too much money flowing into quantum. And I thought I'd take a quick look at how much money has been flowing into the crypto and blockchain space. You can see that investment in quantum, when you look through this lens, is really quite moderate. So it's all a bit confusing. There's a lot of people who don't believe in quantum. They think it's overhyped. And yet there are people who continue to invest in the market and continue to be excited by its prospects. So what is the VC investment thesis now? Well, some of it hasn't really changed much. Quantum computing is still seen as a potential transformational technology, which is focused on enormous addressable markets. I think there was a BCG study that put it in the multiple billions, and I think it could be even higher than what they're saying. If you're looking at things like pharmaceuticals, material science, there are areas here where if you're able to genuinely discover new drugs, materials, chemicals, then you'll be changing an industry in a way that you simply wouldn't be able to do with the techniques that we have today. We're seeing lots of improvements from high performance computing, AI, massive clusters of GPUs, but there's some things where we actually won't be able to solve problems until we can go beyond that. So that means there's an opportunity for enormous potential returns. So in my background, when I was working in the private equity industry, we were happy with 2 or 3 times on a very consistent basis. VCs try and get 10x, and this is definitely a 10x market. If a VC backs the right quantum computing company, and they genuinely are able to offer some degree of advantage over high performance computers, then this is going to be huge. Now, the bit that gets me excited actually is, a lot of organizations and industries have those characteristics, but they require a lot of assumptions. Now, the beauty of the quantum computing market is there's this significant and growing government backing. So you have countries that are massively concerned around the potential security risk posed by quantum computers and the advantage that a particular country could get by being a leader in the quantum computing industry. They look back to the countries which have chip manufacturers, HPC centers, countries who've done really well here, and they see the opportunity. So again, as a risk mitigation strategy, when you're looking at these kind of organizations, the fact that you've got the governments behind it gives a high degree of comfort. But again, this is, of course, venture capital. There's risks. And I think the biggest risk around quantum is there's uncertain time horizons. So let's look at nuclear as a kind of case study. Nuclear fission happened maybe earlier than we thought we'd be able to do in the 1940s. Yet nuclear fusion is nowhere near there yet, according to many experts. We're seeing lots of developments, but it always seems to be 10 years away. So it's quite hard when you have to deliver returns for investors, let's say in 5 to 10 years, to really get comfortable around that. There are risk mitigation strategies that I won't get into, but it's still an issue. The second thing is, as I mentioned, a lot of money is going into these big hardware companies. They're having to build chips, facilities, etc. And this is capital intensive. So when you're a VC, you're looking at companies which are, software SaaS businesses where all that money is going into employees and marketing, for example. It can be a pretty tough decision to make when you have to put $5 million into an advanced facility. So that's a quick coverage of what the Quantum Insider is seeing in the investment markets. I'll just spend a minute going over what we do as a company. The Quantum Insider has 3 synergistic offerings. Effectively, we provide news, and through that, we provide multi-channel digital marketing campaigns for our customers. We have Market Intelligence, that's our data platform that I showed you today. And we give community access to our basic data and a paid subscription to the more advanced stuff. And then finally, because we have all this data and we sit at the nexus of this industry, we're able to provide consulting. So we've done bespoke advisory work for big projects to governments and big corporates. So you can see that we work with some of the trailblazing companies across the quantum ecosystem. And this slide here shows our intelligence platform live. And it's relied on by customers across the world to really understand this market at a level of detail that's simply not possible outside of the platform.